Tilray Brands, ticker TLRY, is currently trading at $1.62, down about 4.14% for the day. While most traders are laser-focused on every headline out of Washington, D.C., the real story today is unfolding in the options market, where unusual call option activity suggests a major player might be positioning for a move that the retail crowd hasn't priced in yet. This isn't just noise, it's a signal that the sophisticated capital, the kind managed through extensive platforms like Fidelity Wealth Management or executed via prime brokerage accounts at Interactive Brokers, is seeing something beyond the daily chatter. The common consensus is that Tilray's fate is entirely tethered to the slow, painful crawl of U.S. federal cannabis reform. Every tick up or down on the chart seems to be a reaction to some senator's comment or a failed legislative push. People trading on the Robinhood app, often looking for quick, sentiment-driven gains, see this stock as a simple binary bet on legalization. But to view Tilray solely through that narrow lens is to miss the far more significant transformation happening under the surface. This isn't just a cannabis company anymore. It's quietly becoming a diversified consumer packaged goods powerhouse, with its craft beer and spirits acquisitions generating more stable, more predictable revenue than its legacy cannabis operations. The market, however, still seems to be valuing it like a speculative pot stock, and that fundamental disconnect is where the real story lies. The daily price action reflects this conflict. We opened today at $1.64, briefly touched a high of $1.66 on a flicker of positive sector momentum, but have since bled down to the $1.62 level, testing a key support zone that has held up multiple times over the past few weeks. The trading volume is slightly elevated compared to its 10-day average, suggesting that today's downward move has conviction behind it. It's not just passive selling, sellers are actively hitting the bid. This kind of price action is frustrating for those looking for investment help or trying self-investing for the first time, as the stock seems divorced from the company's strategic moves. It's a stark contrast to the more predictable, news-driven movements of megacaps like Apple stock or the tech-fueled momentum of Nvidia stock. When we look at the order books on a platform like Interactive Brokers Trading, we can see large institutional blocks being offered at key resistance levels, effectively capping any short-term rallies. This suggests that while some may be speculating on long-term potential, larger funds are content to trade the range, selling into strength. This is a crucial detail often missed by retail investors. These aren't panicked sellers. They are methodical institutions, perhaps rebalancing portfolios or taking profits on small bounces. This is a far cry from the high conviction buying you see in a name like Tesla stock during one of its epic runs. For investors using Fidelity investments to build a long-term individual brokerage account or an IRA, understanding this institutional behavior is critical. Tilray is not currently a buy and hold for these big players. It's a trading vehicle. The challenge for the average person using simplified investing sites is accessing this level of market depth. While a platform like the SoFi trading platform is excellent for accessibility, it doesn't always provide the granular order flow data that professional traders rely on. This institutional skepticism is directly tied to the company's financials. While the diversification into beverages with brands like Sweetwater Brewing and Montauk Brewing was a strategically sound move to generate consistent cash flow, it also added significant debt to the balance sheet. In a high-interest rate environment, servicing that debt becomes a major headwind. Every dollar that goes to interest payments is a dollar that's not being used for brand building, R&D, or expansion. Macroeconomic pressures are a serious factor here. Consumers are feeling the pinch of inflation, and while alcohol sales are generally resilient, the craft beer market is incredibly competitive. Tilray is now fighting a war on two fronts, a regulatory battle in cannabis and a market share battle in craft beverages. This is the reality that clashes with the simple expectation of a legalization stock. Many who began their online investing career during the zero interest rate period have never had to factor in the cost of capital as a primary risk, but for companies like Tilray, it's a constant pressure. Let's talk about what the company actually does, because the narrative has clearly evolved. Tilray Brands is a global cannabis and consumer packaged goods company. It operates in Canada as one of the largest licensed producers, has a significant medical cannabis footprint in Europe, particularly in Germany, and is strategically positioned for federal legalization in the United States. However, recognizing the slow pace of U.S. reform, CEO Irwin Simon initiated a pivot. The company acquired a portfolio of craft beers and a spirits company, positioning itself with a distribution network and established brands that are federally permissible in the U.S. right now. The idea is to build a CPG powerhouse that can simply turn on THC-infused versions of these beverages the moment legalization occurs. It's an intelligent, forward-thinking strategy. The acquisitions give them immediate revenue and brand recognition, something their cannabis-only competitors lack. For anyone considering an investment in the sector, this diversified model stands out. You can hold Tilray in a Fidelity brokerage account, or even allocate a small portion in a robo-advised portfolio like a Schwab Intelligent Portfolios account, viewing it as a hybrid CPG and cannabis play. The company's goal is to smooth out the volatile, unpredictable revenue from the cannabis sector with the steadier, albeit lower margin, income from beverages. The future outlook presents a fascinating set of scenarios, all framed by this tension between market expectation and corporate reality. The primary catalyst, and the one everyone is watching, remains the potential rescheduling of cannabis by the U.S. Drug Enforcement Administration from Schedule 1 to Schedule 3. This would be monumental. It wouldn't mean full recreational legalization, but it would acknowledge medical efficacy and, crucially, would allow cannabis companies to deduct ordinary business expenses from their taxes under IRS Code 280E, a crippling financial burden they currently face. This single change could dramatically improve Tilray's profitability overnight and would likely cause a significant re-rating of the entire sector. This is the event that many users of SoFi Invest and other retail-focused platforms are banking on. Another major catalyst is the continued growth and legalization progress in Europe, especially Germany, where Tilray has a strong market-leading position. Do you think the government will pass legislation in favor of the cannabis industry anytime soon? Comment your opinion below. However, the risks are just as significant. The reality is that federal reform has been promised for years with little concrete progress. A continued stalemate in Washington would keep Tilray and its peers in this limbo, burning cash and struggling for consistent profitability. Competition is another major risk. In the Canadian cannabis market, oversupply has crushed prices and margins. In the U.S. craft beer market, Tilray is a relatively small player competing against giants. If the beverage brands fail to grow market share and contribute meaningfully to the bottom line, the entire diversification strategy could be seen as a costly failure, leading to further downside pressure on the stock. Furthermore, the company may need to raise capital in the future, which for a stock trading at these low levels would likely mean diluting existing shareholders, a major concern for anyone holding shares in their Robinhood Investments account or a more traditional Fidelity IRA. So, what's the final analysis? The market's expectation is that Tilray is a cheap lottery ticket on U.S. legalization. The price action today, with its downward drift on solid volume, reflects the fatigue and impatience with that narrative. The reality is far more complex. Tilray is a company in the middle of a difficult, ambitious transformation from a pure-play cannabis producer into a diversified consumer brands company. The success of this pivot is not guaranteed. The true value proposition isn't just about waiting for a legislative change. It's about whether the company can successfully execute its CPG strategy, manage its debt, and navigate two highly competitive industries simultaneously. The disconnect between the simple legalization narrative and the complex operational reality is the single most important factor for any investor to understand. Viewing it through this lens reveals that the stock's future is not a simple binary outcome, but a long, challenging path where operational excellence will matter just as much as a vote in Congress.